All right. Hello, everybody, and welcome to another Pepperstone Live event. We are just getting ready to go through a whole exciting topic for you guys today. And of course, that's going to be learning scalping Forex majors. So specifically, we'll be looking at a whole bunch of things to do with scalping. We'll be looking at, of course, certain major pairs. We'll be looking at the dynamics of price action, the dynamics of support resistance, supply demand, and how we really break down a market within markets. That is understanding the difference between scalping, day trading, and all of the other things. My name's Thomas Atkinson. As always, I'm joined by Tyrone and Abela. How you going, Tyrone?
Good, thank you. And yeah, welcome everyone. Yeah, we're really excited about this one. It's one of the topics that we absolutely love to present, and we've got some really good concepts that we're going to talk about tonight. And yeah, some of them are playing out live in the markets, aren't they, Tom? So it's going to be good to actually get into that and really explain what we like to see actually in the live markets. But it's a learning webinar, but it's also, yeah, it's basically learning as we go in a live market, which is the best way. So looking forward to getting into it.
Yeah, so as Tyrone mentioned, we're going to go through some FX majors. We'll go through some likes of gold as well and just talk about that, some live analysis of the pairs, and then we'll look at key levels for day traders. How do we determine those? Some helpful hints, some great indicators towards it, and really just breaking down markets in a way that I think a lot of people don't generally do. So I think this will be really helpful. So I've got a little quote here from Richard Wyckoff, if a lot of people don't know him. Successful tape reading is the study of force. It requires the ability to judge which side has the greatest pulling power, and one must have the courage to go with that side. So I do really enjoy this quote because it's kind of like saying if you see something and then it starts to pull back against you or something, do you have the courage to hold that position? And a lot of us in scalping often pull triggers or don't really have that kind of reaction, discipline, patience kind of methodology. We need to be really sure about trades and really sure about where our take profits and our stop losses are going to be. And I think today we're going to cover a lot of that. So which trading pairs are best to start with? Well, in general, you want to look at majors. So we generally want to be thinking about things like gold, US dollar majors, major crosses, major indices, S&P 500, NASDAQ, etc. And they're the best ones to stick with. Another thing we need to make a decision of if we're going to be a scalper or a trader, day trader, is what session is going to be best for us. So here's a few different sessions. And you'll notice here we have the London session where liquidity is potentially starting to really actively come up. The London session is always known as its fast moves, so often very popular with scalpers and day traders alike with Forex. And then we've got the Asian session where it's more of a sideways range-bound market style, a different type of scalping market condition, more range-bound indicators usually work well in that one. And then we have the US session, which is generally a bit of a mixture. The beginning of the US session can also be an incredible time to scalp. We've got the lap over from London into the US, and it gets really crazy. And that's the time that people like to strike, isn't it, Tyrone? They like to really come in between either the overlap between the London and the US or the London session open.
Yeah, most definitely. And I think you really find some really clean moves at that time. Look, London Open can be a little bit choppy. Sometimes you're going to get your fake outs, but that overlapping period is actually a really nice time to trade. And even in New York proper, if you're going to be trading the last part of New York when there's no other market interference, the markets can really settle down and break into some very small short-term trends. You can really actually take advantage of some good positions, and key levels start to play the game really nicely. So look, it really is important. I know people probably overlook that you can't just trade whenever you feel like it. I know technically you can, but it doesn't mean you're going to do it effectively. Ideally, you want to be really honing in on that particular time, and then you really get the feel for what the market actually does during that period. And I think that's probably the key, isn't it, Tom? Yeah, really understanding how the market reacts at that particular time. So if something unusual is happening, you can actually isolate it prior to it actually causing any harm to your account, really.
Yeah, reaction, not prediction, probably is something we talk about a lot, Tyrone. And when it comes to scalping, I'm just going to put some sequences up here that you guys can look at, take snapshots of later if you want to. But these are some very important scalping price action sequences. And I'll bring more into this when we actually look at the price action on a chart. And we'll go through a bit of a process, I guess, on gold. So you can see how you start to construct an idea. So the scalping price action sequences, this is a very common one. The next one that's actually even stronger is this, and it has one of our famous kind of lightning bolt concepts in it. But you'll notice that it's the break of the previous level either over here or over here that we're really interested in. That is the previous level of supply over here or resistance, or the previous level of demand or support over here. These are more important. This price action doesn't matter. It didn't make a new peak. So let's now go into the actual markets themselves, and we'll load up gold, and we'll just quickly cover off on a few concepts. And I want to start from the top down, Tyrone. I want to actually go through an entire scalping procedure, day trading procedure that you could have come up with over the last week. And this is fairly in depth, but we still think it probably is at the intermediate level. So let's go to the weekly here and consider gold. So it's plummeting down. I think everybody can clearly see that there is a incredible trend towards the downside leading into this thing. One sec, I've lost my drawing app. Let me just quickly load that back up again. Got an alarm going off as well in the background there, Ty.
That was just to remind you to put your drawing app on the screen.
Okay. I think I don't know what's going on with it. 1 second. So it's definitely set, but just give me 1 second, guys.
In the first time in 5 years, Thomas has lost his drawing tool. I'm always amazed at how good and fast he is with that drawing tool. This is the first time I've seen him under a bit of pressure, so it's actually enjoyable to see.
Unfortunately, I'm gonna have to. Oh, it's all right. We can reload it again. All right, so we're going to be ready right now to use it. It should load up here, and there we go. Cool, we've got it. Fantastic. So we can get started. All right. Well, I think everybody can clearly tell that the market was coming down. Now, why it's important for a scalper to look at high timeframes, we've got to consider where demand sits and where orders probably lie in the market. Now, you'll notice I have this fandangled looking volume profile over here on the left-hand side. And what that's telling me is it's telling me the area that is most actively pressed in terms of orders over time. And I think you'll probably see where it's drawn. Now, funnily enough, where did it draw? This is taking in advantage. We don't even need the current history, so we could go back in history like this. Notice it has a lot of touches around this zone. So it makes sense there's going to be some resting orders sitting there. So if you draw a box, and I'll just take this box from something else, and I'll bring it across, this is a zone on the weekly that we would be paying a lot of attention to. In fact, you would believe that most shorts are going to be probably closed and covered at this position. It makes the most sense. Now we want to drive into smaller timeframes, and you can set these boxes up to be color-coded as well. Notice again the daily and the profile here, volume profile. You can get it by just typing in volume profile, and that will come up with visible range. You can add it to your trading view with Pepperstone. So if we move across here, and you think about where we're at a point with a lot of wicks. Now, what do wicks mean? Well, they mean that there's a lot of demand coming into the market as well around that point. So if there's a lot of wicks there previously, we can see the tweezer bottom here. It makes sense that the market might tank into this zone. Now, if you're a shorter and you're trying to short round here, and I'm scalping, let's say, scalping day trading, I'm going to ask the chat this straight away. Chat, would this be the best place for us to place shorts when we've done our weekly, daily analysis? Remember, we're not even into the smaller timeframes right now, but this makes us think about it.
And there's only one right answer here, and if you get it wrong, you're being banned from the webinar.
Yeah, well, hopefully we would find that most people would get this one correct, but it's probably not the best area to be looking for shorts. Yeah, but it could be a good area for us to potentially look for some kind of long, some kind of movement towards the other direction. So let's now scroll into the smaller timeframes and have a look here. What have we got moving, or what have we got being placed? So I think this is where the sequence comes in. Remember the sequence we were talking about before? We had a movement from the market going all the way down, and then something happens. It breaches this level. It breaches the last peak. So remember, it's lower trough, lower peak, lower trough, lower peak, lower trough, lower peak, lower trough. Now, this is a 4-hour time frame. Let's go to the 1 hour and have a look at that. Here's the 1 hour time frame. So how does this one look? We've got lower trough, lower peak, lower trough, lower peak, lower trough, breach. At this exact point in time, you can expect a few things to occur. Firstly, on the 1 hour time frame, first time frame, that is the first time frame, it's in our course, we do talk about it, it's change trend. So effectively, the trend has changed on the 1 hour towards the upside. Now, at this point, considering it's come off our heavy level of demand, we can actually start to think about things a little bit differently. We can say, okay, wait a second. This is completely changed. This demand has not only been purchased up, but we expect at this point that, yes, the market will run, but we also can expect it to come back. Okay, that means it will actually come back to a level. Now, I want to show you this by just keeping our volume profiles on. And what you'll notice is that as we zoom it in and as we get more the data around this, before it all happens, where are some of our key levels? Well, one of our key levels sits here, and obviously this resistance. So there's a resistance up here. There could be some shorting action that may occur around there. Previous level of supply. Certainly, we were in a current downtrend on higher time frames, so there could be shorting. But we also expect this area down here, considering it's been hit quite a lot of times before, to potentially be a zone in the future that the market will pull back to and that we want to scalp. And I know it seems like a lot of setup, and it is. There's no doubt. There's a lot of setup here. But this is what it takes sometimes to find really high quality scalping areas. So we expect the market to pull back to this zone, or at least we hope it does. And if it does, we know that this is going to be an interesting level. So let's now bring it across to this zone. Okay, what happens? It comes into this area and it starts to potentially rally through. So we get a little bit lower and then we rally through. So in this area, what do we start targeting? Well, if we get an alert for that day, we could come back in and we could say, okay, cool, it's in our zone. I'm super excited about potentially finding a trade. Let's now break down the smaller time frames. At this stage, we're on a 1 hour time frame. What if we now go into something like a 5-minute time frame? We'll just scroll back through history just because it is here. And it only happened a few days ago, so at least we've got it there. So let's look at some of the sequencing events here that occur. So again, what do we have? Well, we have here the last peak. That is the last rounded peak. That's going to show on, if it's showing on a 5-minute like this, it's probably going to show on a 15-minute as well. The market makes a new low, the same sequence. The market comes up, makes an equal peak here, and then it breaches it. So considering what we knew before, because remember, it's the same sequence. Considering what we knew before, what do we expect for the market to then do? Well, it then most likely will come back to a point that we're interested in. Of course, it's breached. We expect it to come back down. So where do we expect it to come back down to? Well, we can consult potentially the volume profile and have a look at some of the key levels if there are any in here. The other thing that we can do is if we don't have the volume profile showing us anything in this range, well, there is one here. I would say probably that's the closest one we have. Do we have candles and formations that make sense around there? And what you're looking for here on the small time frames is wick style candles, doji style candles, and all of that good stuff. So somewhere around that 18, 12 zone would be pretty good. And yes, you're actually prepping on prepping here. So then the markets come down, which you fully expect to occur because that's exactly the same setup that we already saw. Then the market comes down again. And what does it do this time? Well, we get a point where we're looking for the same type of thing. Now, do we have a small time frame? Because this is where you actually go even lower as a scalping time frame. Do we have a new low here? Do we have a swing? Because if we're on a 30-second chart or minute chart, that's going to be, do we have a breach? When that occurs around the area that you're looking for, considering all of the setup you've done, which you know at this point could be a double bottom as well, this becomes an incredible trigger zone. And what it is it's basically just using 3 different time frames to access a scalp. Now, it's a bit of setup. There's a bit of time taken into this. But once you do these types of things, think about it. You've taken a 1 hour time frame and you've said, I now know that the time frame has changed. That is known. That's not you predicting something. You've seen it happen. Some people call it confirmation. Tyrone and I talk about this all the time. We expected the market come back to this zone. We then expected it to potentially turn around, which it did. It breached. And then we expected it to pull back again. And these pullbacks are very, very common. This is the way that most people get crushed. They see an order, they put a position in here, they don't put the correct stop loss, maybe they put it there and they get crushed, makes a new low just slightly, knocks them out, and they get sad face. And no one wants the sad face, Tyrone, do they?
They definitely don't want the sad face.
So what we want to be doing then is we come in and we keep going and we drive down through time frames. So it's kind of like going 1 hour or daily, weekly, we've found zones. We go into the 1 hour, we find confirmations, and then we target these areas. Now, that's to find the highest probability style trades. That's to find these really high quality ones. Now, of course, if you'd entered these positions here, let's say you just flat bought that for any reason, and you'd put a long position on it, where would you place your stop loss? Obviously, you'd place it underneath the lows here. You'd get damn close to it. If you use the final confirmation, it would have gotten you in here. And of course, you wouldn't have had to worry about this bit. But, you can't always be there in front of charts. And where are you going to set your take profit? So this becomes a big question a lot of people ask. And the most logical thing is, remember to ask the question of what did we just expect? Demand on the daily, big deal. Change of trend on the 1 hour, huge deal. Movement back down, a sweep effectively of liquidity, a grab of the last level of demand. We're expecting this to skyrocket. Are we expecting it just to stop here? Generally not. So if we use something like a volume profile that can help us with this tool, where has been our last big levels? And I think a lot of people will say, well, what about up here? Does that make sense? I think it does. And this would be a fantastic take profit for a day trade or a scalp. And you can imagine the type of payouts that you can get on these types of orders. I mean, this is an 8-to-1. Now, it doesn't, because you've prepared it so well, the capabilities here are very, very high for you to get these type of orders. Now, if you don't prepare it this well, if you don't structure up a formation this well, you won't always get these kind of huge positions. But something like that is very, very capable of you doing it. And of course, it stops around there, and you can see that gold kind of has a struggle zone. And you can use this for certain pairs, highly liquid pairs, highly common kind of things. But we've actually just broken it down to multiple processes. Recognize the demand zone, recognize the change of trend, recognize the switch. We'll go over to US 500 just so I can show something very similar that happened the other day. Now, in this case, you're looking more for the pullback, but let's consider yesterday's market action. So if we're here on a 2 hour, what's happened? The trend has gone down, the trend has come back up, and it's breached. Therefore, what has it done? Lower peak, lower trough, breach. Change trend on the first time frame for the 2 hour and the 1 hour. So what do we expect at that point? Well, we actually expect a pullback. And where do the pullbacks happen? Well, they could happen at this box area here. So this could be a zone, or they could happen during the day, potentially somewhere in this area. So these are the two zones that you would target. Nowhere else really makes sense. These are the two zones that you would target. And you can tell why. If you put a volume profile on, you'll see. And if you basically bring that across, that becomes a key zone for you to be looking at. Now, just because it's a zone doesn't mean you're going to trigger it. So let's go into the smaller timeframes, into a minute chart, like a good scalper would do. That's what we're all about, in terms of scalping. What targets or what areas would we be looking at? So let's now consider what happened during the session. So the session opens and it basically just gets destroyed. So let's have a look here. It goes down, up, new low, no new peak. Then we get new low again. I'll just make sure this is the right time. Yep, 24th. So we get the new low and we don't get a new peak. We then go down again, and we keep going down. And then what happens is we get a level where we create a peak. We make a new low. Interesting. So what do we expect at this point? Let's ask the chat again, and I'll let Tyrone just explain why these kind of things make a lot of sense. But where do you think that we would be potentially looking for a long? Can anyone see the price that we might want the price in the 1 minute to get back to and then expect a pullback? And this is the way that markets work. They go up, they breach levels. A lot of people see it as confirmation. Then the market will swing back down, grab the orders underneath, grab that demand, and then it will swing back up. So a lot of the time people don't understand, why does this come back? Why is the market against me? It's this type of thing, isn't it, Ty?
While we're waiting for a couple of those answers, it probably, if this is the first time you've seen this concept, it might appear a little bit confusing and a little bit overwhelming. But look, I really, really strongly encourage everybody who is maybe struggling, because this is an intermediate, so we're sort of going a little bit more in depth today, but really check out the replay and watch it over a few times, because it really isn't as complicated as it might sound on face value, because every single motion that we're talking about here makes perfect sense in the normal sync of the market. And when you watch it back in replay, you'll understand exactly what we're talking about. You'll understand these zones, because this plays out a lot more often than you think. Now, I know it might appear like, this is an awful lot of setup for a trade, but in reality, even if you're scalping, the more setups that you're setting up like this, and you get like a potential 5, 6, 7 to 1 trade, you potentially are trading one trade instead of 15 trades in a night and actually making the same amount of money. So although it appears like there's a lot of setup here, Thomas has been able to explain that in 5 minutes and actually set it up at the same time. So it's not as much setup as it looks like. It's just a little bit of work to actually get it. But believe me when I say you can actually do it pretty quickly once you understand what you're actually looking for. And when you do,
of course,
the trades will present themselves very, very quickly in a lot of the major markets. It's a very, very powerful tool. So just don't be too afraid to ask a question, of course. But if you do feel that you've missed a bit, be sure to check the replay out. It's there for you and available for you. Really, really grasp this concept because it's very, very powerful for scalping.
Yeah, so the sequence, Tyrone, is all about making, and a few people have had a go at guessing here, so thank you very much. And the sequence is all about making a new low that is effectively sweeping what we call maximum pain, taking out a new low, and then sweeping back into the sequence. So in this case, what we want to do is we want to breach 38.95. So a lot of you got very close. 38.92 was a very common one. And you're not wrong. It's a pretty key level that we want to be breaching, but I'd like to take out that high. So let's have a look what happens here. So you'll notice the market takes out the highs. So a lot of people, if you've watched videos that we've done recently, can anyone guess what that also is if you understand really high-end kind of technical analysis from the action of accumulation? Can anyone guess this type of pattern? Because it's a mixture of two. And that's, I think, what it is really exciting about. Now, obviously, as Tyrone said, this is intermediate. So we expect you to know some things about price action. Obviously, standard sequences like this, that's just a standard trend. All we're doing right now is just changing it a little bit to say, okay, instead of you just considering the change of trend on one time frame, we're using multiple time frames. And we're saying we want to breach the previous swing and take out those orders. That's what we're doing here. And in Forex, it's very important you consider this. So this is what they call also a Wyckoff. Remember, we had the quote from Wyckoff before, and a few of you people will get this. Basically, we have a maximum pain bottom. We have a level where, in some ways, 38.92, you could have triggered this as well if you were really, really into it. But we have a Wyckoff accumulation. Here's our max pain. Here's our next level, of course, that's come back down. And then the market just shoots through and it goes through it. Now, when this occurs, there's usually a pretty keen point where you've got this change that the market will want to come back and it will want to test at least this zone. Now, again, you put a volume profile on, you'll see there's a lot sitting around this zone. So a lot of people can't understand, why would a market come back and grab? This is a zone where the market will generally come back and it will try to grab it and it will try to get back to this area. And I think you'll be surprised that it does come back into this zone. See how it comes back and it creates a lot of wick style candles on the 1 minute. What are all of these? These are demand coming back in. So these are orders grabbing this zone and saying, we're happy with what we saw over here. We've pushed it higher. We come back and this becomes a defense area. And it's all got to do really with the bottom structure here. This is the most important component. When it changes here, you expect it to rally, but generally speaking, a lot of the time, these markets will come back and they'll grab and then they'll move forward. And a lot of people don't understand that that's what unfortunately happens in markets. The market dynamics move like this, don't they, Tyrone?
They do. And look, what you'll probably understand for the people who have been following us for a long time, what we're actually doing is breaking down the bigger concepts that we always talk about. What that also looks like, and rightly so, is people will say, well, that's actually the role reversal you guys are always talking about. Yes, it's broken up through and it's come back down and tested that level from above, which makes it a role reversal zone. Absolutely. But what we're doing at the moment is actually breaking down the intricacies of the very larger things that we normally talk about to allow you to actually scalp inside some of the bigger concepts that we talk about. So it's an on-flowing action because some people, look, we've got all different traders, right? We've got swing traders, we've got scalping traders, and we've got the longer-term traders that are quite willing to wait for these positions. But this is giving you multiple avenues of being able to trade effectively the same thing. You look at that, and yes, it's an absolute role reversal. It's broken through. We fully expect that it's going to come back and retest it. But what this concept is giving you is the ability to have about 4 or 5 different trades inside that while it's actually happening. And it just gives you so many opportunities to actually get in and trade the same thing that you're probably expecting to happen anyway. So this is just taking what we have always talked about to a more intricate level, so you can actually get inside those particular areas that we're talking about and really trade them and understand them.
So US 500 is just an example, and obviously these futures can be certainly looked at. If we go and have a look at some other pairs recently that have done some change of trends, let's just consider the sequence here on the higher time frames of the Aussie. This is the Aussie US dollar. What's it done recently? Well, it was making a series of lower peaks and lower troughs. Again, on this high time frame, it comes back to this area. What do you expect for it to do at that area? Well, because this was previous resistance and previous support, this is also going to be, many people that trade demand supply, they'll know it as a supply level. What do they expect to happen here? Some shorting comes through. So this is a very good short zone, especially in a downward trend. But when that level is breached, such as over here, everything starts to switch to more of an uptrend. And this is where we want to get into the live market and understand it. So again, the sequence is broken. Think about all the different time frames. The market's effectively made up of, really just originally bid and ask. So 1 minute, every second time frame, 1 minute, 3 minute, 10 minute, 12 minute, doesn't matter what you've got. This is what's forming. This is the structure behind it. So when it breaches this level here, it changes trend on the first time frame on the 1 hour. So what do you start to look for? Well, we start to look for potential pullbacks in the market. And one of those things is this market's currently running quite hot. So of course, the Aussie has started to run away. But if it comes back, where are some notable zones that it might come back to? Well, again, if we have something like a volume profile on, I think you'll notice right around here, this 70 at this point was a pretty key level. If we then start scrolling across, what you'll notice is that we know 70 is a key level. It's pretty obvious, psychological zone. And we draw this as a box. So what we want to do is we want to say, okay, we like 70. So maybe we'll draw between 70, 20 and 69, 90. What do you think, Ty? I think that's a very clean area here.
Yeah, I think it's a great area. And it's a very, very common area for it to come back to.
And that's an area where now in the future, if you have certain trading systems or scalping systems, these areas become very important for you to therefore, it doesn't mean it's going to trigger, but if you think about it, we've changed time frame on the 1 hour. Does that change the daily? No, the daily certainly hasn't changed. If we go to the daily's up here. So it's going to take a lot to change the daily time frame. That certainly hasn't happened. But because we've changed on the 1 hour, let's have a look if we've changed on the 4 hour. Yes, we have. We broke it at the same time as we broke the 1 hour. So 1 hour's changed, 4 hours changed, therefore 3 hour and 2 hour have all changed. So this zone here becomes a point where we could potentially come in if it's there during a session open, London or New York. What could we do, Ty? We'd be pretty excited about potentially having a look at that one during the open, wouldn't we?
I'm always excited about the Aussie Thomas, and absolutely, you could be definitely doing that at a market open. But I think though that we're seeing a pattern form here where you can really see how you can actually break down some of the smaller moves of the market, but more importantly, prepare. What I always like to do, one of my favorite things is preparing like a game of chess of where I'm going to take profit, where I'm going to look for a potential reload, where I really want to get involved. When you actually get to the point in your trading analysis where you absolutely have a feeling of where it's going to go, and basically you're going to trade to that direction if it moves there, or you're just simply not going to get involved if it doesn't, you would be absolutely blown away at how many bad trades you will eventually start to miss. And taking the bad trades out of your trading Bible, if you like, it makes an extraordinary difference to your bottom line. Now, I know that sounds probably pretty simplistic, and you say, well, of course, why wouldn't it, Ty? But it's amazing how many people actually don't get this right. And if you do get this and understand the concept, you would be not that you're obviously going to get a lot of good trades out of it, but I think what it's going to also do is keep you out of a lot of bad trades. And that's actually just as important as actually finding and really understanding good trades.
Yeah, absolutely. Not getting into bad trades is super important. So right now, a lot of people are going to see this and they're going to say, well, look, it's going to short. And I probably don't disagree with them necessarily, Ty. I mean, we've made a new a trough here. We've made a peak. We've obviously made a higher trough, but we haven't made a higher peak. So remember, in the sequencing that we were talking about before, this could theoretically come down, hit this level that we're interested in the future potentially, and it would still not have actually changed time frame on the 4 hour towards the downtrend because it hasn't broken under this level of demand yet. And this, for many people, is going to be a double top. And they're going to look at this and they're going to say, oh, I like that double top. I don't blame them. I mean, of course, if you take the distance of a traditional double top, where do you think that's going to have? So there's a lot of things going on in markets. But if you think about it, of course, it makes perfect sense that it would try to come down to this level, because that's the level which is most likely going to be defended by the market based on previous orders and previous openings. Remember, it's all about where are the orders sitting in the market. That's also something that a lot of people don't think about.
And it gets very, very sexy when the patterns play out and actually complement each other and go to the zone, the exact zone that you're actually looking for, because it makes that pattern so much stronger. But again, we must reiterate, that is not necessarily changing the trend on the 4 hour. All that's doing is coming back to a zone that we would be very, very comfortable getting in on. And that's the thing. Like, there's two potential trading opportunities right there if the smaller time frame changes in time, but you're still not trying to go against the prevailing trend. In this instance, we're talking about a prevailing trend on the 4 hour, which is absolutely long. And if it comes back and falls down to that level around the 70, and even just a little bit below the 70, anywhere in that rectangle for that matter, if it does that without changing the peak and trough sequence, it is still in a technical uptrend on the 4 hour chart. And the 4 hours is a no nonsense chart for a scalper. Make no mistake.
Absolutely. And look, I mean, the sequences are happening everywhere. I mean, of course, you've got here a new low, you've got a breach. What do you expect? Market to pull back. Market does pull back. Market then goes back to the high. So figuratively, you could have scalped this. What I'm trying to get at, and Tyrone's trying to get at today, is there's going to be sequences everywhere in scalping. And you're going to get a lot of orders if you want to take orders. The problem is going to be, are they highly profitable and are you correct? And that is where multi-time frame analysis comes in. It's so important to think about multi-time frame analysis, to understand multiple different technical techniques. And once you know those techniques and you start to bring it together, you can really be more effective at scalping. Because the problem with scalping, Ty, is overtrading. How many people in the chat overtrade or think they overtrade? I'm going to put my hand up here and say, I used to do this.
Everyone still.
I mean, I'll put two hands up. Okay, it's a stand-up, Ty, because overtrading is the biggest problem with scalping, and that's because you see opportunity everywhere, and you're like, "Whoa, I'm on the 1 minute. It's open. I'm going to take this. I'm going to take that." If you have enough pairs, let's say you've got 8 to 10 good pairs, there's no reason there shouldn't be something happening every day or every 2 days, in the scalping world, even with these bigger setups. But a lot of you like to probably trade 10 times a night. And yes, you can, but ask yourself, how many of those are high probability positions that you would be able to scale effectively your business, which would be your trading business, off? And that's the problem. Some of these things, yes, you can look at that and you say, oh, I think it's going to come back. But do you actually take profit here? Or do you expect it to breach higher and then you to get even more? That's the problem. When you want those kind of bigger ratio trades than just a smaller ratio, these are very tight scalps, which require razor thin stop losses. And literally you have to get into the second chart to activate them. Very tough stuff. I'm not saying it's impossible. It's possible, but it's tougher. So I'm just trying to show you a more replicatable concept so you don't burn out. So
overtrading. We've got a question. John asks, define overtrading. Generally, overtrading, John, is when you're actually trading. Probably it's probably a loose term, but you're almost trading for the hell of it. You're placing a lot of trades because you feel you're investing a certain amount of time into the market, and you might have some. One of the biggest mistakes people make is actually having a quota of potentially how much money they need to make in a night, or how many times they need to actually get involved in the market to actually make it worthwhile for sitting there for 2 or 3 hours and doing the analysis. Look, there are times and there are days where Thomas and I may not even get involved in a trade for a day, 2 days, or 3 days because the market's just not right. And then there are other times where there might be 5 or 6 opportunities in an hour. It doesn't mean that we're over trading, but what it means is we're actively selective on the trades that we're placing. So when you're trading, and another way, there's a few different ways that you can overtrade, and one of them actually is also basketing. We're not going to talk about basketing too much tonight, but basketing can be a common problem as well, where you trade one particular pair, for instance, and you might take 7 or 8 different examples of effectively what's happening in the same trade. like you might be say bias a short yen or something, and you go on, basically short every yen that you can find, and there's a lot of them, and that can be a symptom of overtrading as well. So really, trading for trading's sake, I think, is probably the best way to describe overtrading.
Yeah, I think so, Ty, and it's such a big problem that so many people do have. I mean, we've got some questions here. John says keep it at 2 max losses a day, negative 2% usually if you're risking 1% per trade. And then he says have a system to filter out bad trades, etc. Exactly, have a system. What is your system? Also, what risk management criteria do you have? And we'll talk about that more, but in general, people don't usually like that kind of webinar as much, do they, Tyler? They don't like that live session. It's a bit boring.
The minute you say, if we're talking about risk management or psychology in the market, no one's going to turn up. And
we'll say this. Go to fxevolution.com, our website, and get the free Presic account builder. Okay, that's a little thing there. Ty might be able to get a link for us in a second, because that's a good way of compounding your account while not really taking over risk. And what you do is you reward your account with money when you're making actual returns. So when you make 5%, then you get to add some extra cash into that account, and so on and so forth. And what that allows you to do is it basically allows you to compound it up while you're still keeping great risk management. So definitely check that one out. I think it's well worth it, Ty. That will probably do the risk management in a nutshell. Yeah, 30 seconds, and you just go look at that one.
Absolutely, absolutely, and it will help you build your trading account more importantly as well. So
exactly,
you've got, it's a bit of everything.
So let's just load up the euro here, because I think this is kind of the real problem in the markets and with a lot of retail traders in general. Is about a week ago over here, I know on our main channel we were talking about this, Ty. I considered that probably the dollar, that is the US dollar, was going to probably start shorting and that the euro would start to move up. Now, there are a few reasons why, but mostly it was the spread of everyone doing the wrong thing. So a lot of people were buying the euro the whole way through. And I think we mentioned this last time. They were buying, Ty, just constantly buying. Buy. By the time it went down here, a lot of people, sentiment reports showed me this, had switched to shorts. They were like short. And of course, what's happened is as it's gone up, they've tried shorting everything. And the problem is it's actually switched trend now. And now we're at a 50-50 in terms of sentiment reports. Sometimes it's actually even 60-40 towards the shorts. So if we think about what's happened here, let's just go back to the sequencing of events. Remember, if it's down, when it breaches, what happens? It changes trend on that time frame. Did it breach? The answer is yes, it did. So what do we expect next? Well, a bit of a rally, and then most likely a pullback. And it's kind of consistent with the other things that we've been talking about. So you go back into the smaller time frames, and what it also has done is it's broken above a bit of a downward trend line. Not a strong one, but certainly something that's there. So we could go into something like a 1 hour, and we could have a look at what's been happening so far. Big area for it right now. New peak. There was actually even a new peak in here with a trough. So this is trying to get down. So where are a lot of previous positions? Well, according to the volume profile here, you can see there was tons of congestion around here. And that's part of the reason why it picked off this zone. But anywhere in this box area, if the market comes down, it's a pretty wide box area, you're looking for sequence changes, because when that occurs, this is something that you might expect the euro to come back down into. And if it does, and you get the sequence event on the smaller time frames, then again, it's something you target for those days. So there are certain days that you're going to say, I see what's happening here. So maybe the last session, you were looking at this saying, maybe I think there's a short coming through. Maybe today you've been looking at it and you say, okay, if it breaches under here, I think it's going short. And you might expect even that the market comes into here. But when you do multi-time frame analysis, this area here becomes very, very exciting to you. And it's similar to what we expect on the odd, isn't it, Ty? With a bit of a pullback and then a potential long actually coming off this based on the current change of trends on multiple time frames.
Yeah, most definitely. It's just so important to understand these zones. It just makes everything so much easier. And when you do actually grasp it, I think that you'd be surprised at how it will actually change the way that you actually do enter and exit positions. I think it helps you in both ways, right? It's not just about entries here. We're talking about, really helping the exits as well. So it's a very, very important concept. And yeah, and I know we're making it look easy, right? But as you can probably, I'm sure you're aware, we're talking about things that are happening in the market right now. We haven't gone and cherry picked these opportunities that have happened in the last 6 weeks. Like, we're talking about things that are happening here and now. And we're finding them in the time frame that you can see, well, okay, I can see how that could work out. And you're setting up. So one of the biggest knocks on technical analysis is people say, oh, it's always great in hindsight. But what we're trying to do here is actually show you how to set these up in the real markets, so you can actually see them and you can actually set the trap. Don't be the person getting trapped. What you want to be doing is you want to be the trapper. Thank you, Tom. You certainly. We used to call it the cheater in the grass, waiting for the attack. And I know it's still very relevant. It's as relevant now as it was 10 years ago when we first started talking about it like that, because it really is what you're doing. Like, you're not trading again, for the hell of it. You're actually having a very methodical approach at actually entering the right levels, but sometimes that involves a bit of waiting. But the waiting is generally worth it, especially if you find some of those trades that are going to give you 5 to 6 to 1s, with sometimes surprisingly small stop losses.
Exactly. So we've got some great questions coming in here, Ty, but I just wanted to quickly just remind everybody, if you have been enjoying this stuff, you want to see Pepperstone do more of this, smash that like button. It does really help them know that this is the type of content that you enjoy and that you really like. So Alham, says here, when I started to wait for the trade to come to me rather than forcing trades, that's when I started making profits. So obviously already on the trail of understanding the market moves in certain areas. When you're looking for confirmation, that's fantastic. You might see confirmation of a break of a trend, like let's say down here. You can see I've got some boxes for change of trends on very small time frames, such as the 1 hour down here. And then it comes back. When it comes back to the zone that you might have detailed, you can then, of course, react to that. You've already seen what the market's hand is. And that was the whole thing that Wyckoff was trying to really get through to people's minds, that the market, or the composite man, is effectively trying to trap you. And do you want to be the trap, or do you want to be the trapper, as Tyrone says? I want to be the trapper, Ty. I want to trap everybody else, ideally. That would be better, wouldn't
definitely. It? Most definitely.
We've also got another comment here. Says, what is from Dennis says, what is the best time frame to identify trends if trading daily? Well, the best time frame, I think, is a 4 hour, 1 hour combo. So basically, you're going for 4 hour, having a look at how the trend is setting up for that day. And then you want to kind of find out your key zones. That really helps. And then a 1 hour I find very, very good. And the reason 1 hour is so excellent is because everybody, no matter what time zone they're in, remember 4 hours depending on the time zone that you've set that 4 hour block up for. So whereas you might think, oh, it always starts at the end of the day. What end of the day have you selected? Whereas
it depends on the GMT. Yeah, absolutely.
Yeah, exactly. It depends on the time zone. So the 1 hour is always going to be very similar on people's charts. And that's very important in some ways. So I like the 1 hour a lot. I love to see 1 hour changes. So like say up here, if you were thinking about the sequence, right here, the trend really changed towards the downside. And you could say, okay, well, at this point, I'm looking towards more shorts on the scalp time frame for the day. And of course, it has just kept shorting, but now it's here. It might pull back, to a zone like this or something, and there might be a little scalp short on there. So 1 hour is very, very good for doing that. And follow the similar style of sequencing that we talked about today, and bring in your own style and bring in your own concepts on top. And often it'll lead to a lot more. Remember, it's react, don't predict, would be what I'd say there.
Most definitely. David has a question for us, saying for Aussie traders, what is the best time of the day to be the most active, to take advantage of the sessions? Look, amongst traders and amongst our community, definitely one of the most active sessions is the London Open. I prefer the London Open an hour later, if you like, let the market settle down a lot. But look, there are some good trades in the London Open as well. But I find that if you trade, the first, say, 3 or 4 hours of London, that's probably a really good time for Aussies to trade, because one, if you work a normal job, you have got the time in the evening. You might have put the kids to bed. You might have, given them their baths and had your dinner, and you actually get a chance to actually finally sit down and relax. I always, regardless of how good the market's moving, what you don't want to do is find yourself rushing to try and find trades because you've got other things that you need to be focusing on. When you're scalping is one of those things where you really have to be finely tuned and actually really be in tune with the market. It's not one of those ones where you're watching a bit of Celebrity Apprentice and you might go in a commercial and see if you can place a trade and come back at the next commercial, right? That's not what you want to be doing. You want to be focusing on it because it's not a hobby. Like, we're trying to make this, you've got to take it seriously if you want to really get the best out of it. So those early evenings for Australian markets, especially in the eastern states, are very good. I think if you live in Perth, you come at an even better advantage because those things happen even earlier. And you can do your trading before dinner, I believe, with that 3-hour difference. But London is definitely the way to go. If you can bring yourself to stay up late and do the after 11 p.m. trading, you are going to get that New York crossover as well. And there is certainly a lot of market action in that time as well.
Yeah, I think I would probably go with similar to probably what John says here. For me, would probably be London and the overlap. So the overlap's really, really good as well. But you know what? I don't really like even necessarily sitting there during those opens. What I prefer to do is use a multi-time frame attack to find zones, because you got to remember, you got to be in this game for a long time if you want to be there. You get burnt out. So the best thing to do is set alerts. Find your box, find the area that you're interested in, set an alert, and if it comes back, you're going to have to wait for some trigger in there anyway, generally. So you might as well just set alerts and then come back to the screen when you're getting an alert, text message or whatever on your phone. And that will just save you a lot of time from sitting there going, yes, that's a good 1 minute close. I like that one. It's a waste of time. I've done it. I've done the 16, 18 hour days. Waste of time looking at the 1 minute chart all the time. Instead, you should be finding areas. And then, of course, you can do that by using confirmations and then letting the market come back to those zones that you expect the demand and supply to be at. That can certainly help you a lot.
Yeah, absolutely. Jetan has a question for us. Just wanted to ask, how do we file for taxes for our Forex trading profits? You just don't tell them. You just leave it alone.
That's very bad. So you definitely you have to get an account.
It depends on which country you're in, to be honest. It's all handled differently. Of course, you've got to tell them. Look, Thomas and I always say, and we profess, look, we've been, financial planners, we're investment managers, as you know. We always say that having a tax problem is a great problem. When you have to pay tax, it means you're profitable. Just do it. Treat it like a business. Treat it like any other business that you would be running. If you were running a milk bar and generally speaking, Forex trading, it is a little bit different to investment tax, where it's different to capital growth. It is treated as an income for most people. So it's almost like, put it as an example, if you were trading stock and you were getting paid dividends is treated as income from a taxation standpoint. Generally, currency trading or CFD trading is traded in the same manner, but it's always best to check with your accounting professional because there are different ways that they can handle it. So always check with your accountant. But of course, if you've got a problem where you have to report tax when you're trading Forex, that's music to our ears because it means that you're being successful and profitable. And that's an awesome thing. But definitely check with your accountant because there are different ways that they handle it. But the common rule of thumb is it's treated as income, not capital gains.
All right. We've got some Farmhouse and Garden says nice information. Thanks for the share. No worries. Make sure you smash that like button if you can. Helps us out. And then we have John saying 100% people don't realize alerts do so much. Alerts will really save you a lot of time. So the time that London opens, generally you'll just have to look it up in terms of just look up London Open and then say London Open for Forex. Versus whatever time frame you're in, because it'll be different depending on your.
And there are indicators, I'm pretty sure, that you can put on a lot of these platforms where they can actually highlight the zones, that you can actually get a light highlighted zone, and it makes it very, very easy to do as well. So there's definitely things and it's all free. They're all free source as well, so it's actually really good.
Yeah, cool. All right. Well, Ty, I think that brings us to the end there. And thank you very much for everyone that's joined us. Basically, if you enjoy this content, please let Pepperstone know. Give us a like, give us a comment down below. We've talked about sequences today. As we said, the two real main ones, or the four more real main ones you will look at is this. So standard trend down, the breach. That's actually the important point. A lot of people don't realize that. You could also have the alternative, which is like this. If it goes up heavy like this, though, expect it to pull back a little bit more aggressively, because that trend was very, very aggressive to breach that level of supply. And on the upside, what you're looking for is just that. So that, or of course, with the back, we're looking for this. And if that happens, we kind of prefer that one, because it allows us to therefore know more likely than not that the market's coming back into this zone. And that's where it should stop when we look for that scalp short. So yeah, really great stuff. Thank you so much. Volume profile, just select the one that's in here and you select visible range. But you can also select a few different ones if you want to just pick an area and figure it out. So you could go from a lot of people like to go from the session low to the session high. Maybe that was the session. It probably wasn't. And then what they'll do, it wasn't because it's now. What they'll do is they'll take that range and then they'll figure out what the biggest areas or zones are in here. So certainly check that one out.
Yep, most definitely. Look, traders, thank you so much for joining us. We really, really appreciate your support and coming and joining us on these evenings. We'll be back with you in a couple of weeks' time. If you have found tonight, a little bit challenging because there's a lot of information to absorb, be sure to check out the website and the YouTube channel. Pepperstone have got everything you need to know there. Every webinar we've ever done are on their YouTube channel, and you'll find a lot of good resources there. So never be afraid to check it out, because there are a lot of little hidden gems that you can really take away from tonight and apply it to your own trading. If you have any ideas that you'd like us to cover in the next in the coming webinars, be sure to let your Pepperstone advisors know, because we do love your feedback, and absolutely we love bringing these to you. So thank you so much again for joining us, and we look forward to seeing you very soon.
Absolutely. Look at that. Just to see that volume profile going to work. Look at it. All right. Absolutely. Thanks so much, guys. Catch you, everybody. Bye for now. See ya.
Good night, everyone. Bye.